Hello, 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 hello. Mic testing, mic testing. So, hello guys, and welcome to the 78th edition of the Trading Opportunities webinar. And let me just firstly check my own microphone first. 1 second. Let me just firstly check my own microphone. Yes, it is working. So, do not forget to say hi, hello in the comments section. Sorry, live chat section, of course, because we are live and currently in the 70th iteration of this series. So let me give you a very, very quick introduction, guys. My name is Nirav. I'm the admin and owner of the website 50eyes.com as well as the YouTube channel 50 Eyes Market Analysis, where I have been doing these webinars called Trading Opportunities webinars for quite a decent amount of time, as we are currently in the 70th iteration of the same. So in the past 60, let it load properly. 1 second. So in the past 68 webinars, we have been able to capture 92 big moves live in front of you guys, of course, right? What happened in the 69th webinar, which we did last week on Friday at the same time, we will check today in our 70th iteration, right? And before we proceed, very quick introduction. I'm also the author of the book Think with the Markets. My favorite area of expertise is Elliott Wave. And I do have a track record of 6 years plus with the 80% plus accuracy. I would like to have shown that, but it looks like our server is down at the moment. So I'll leave it at that. Also saves a little bit of time for you guys from getting bored. Now let's head over to our actual discussions. So the way we proceed is the same. First of all, we'll check Euro USD, which will be followed by crude oil, gold, S&P, and then Nifty, followed by BTC at the end, right? I would appreciate if someone from the chat can confirm if my audio and video is clear at their end as well. Well, thank you, Ray. In that case, let's now proceed with our legal disclaimer suggesting all content presented here is for educational purposes and not soliciting buy or sell. If you do want to use the views presented here for your trading, investing, or any other purpose, you yourselves will be liable for your risk, your profit, your loss, or loss of profit, etc., etc. You can read the rest of it all by yourselves. Now let's head over to our actual webinar. Thank you, Ray. Thank you, Madhavji and Alejandro. Alessandro. Hopefully, I'm pronouncing it right. So first chart, as we can see over here, is the chart of Euro USD, not BTC. We will discuss that as well, of course. Euro USD. So before diving into the current analysis, I'll just like to point out what we discussed in the last webinar, right? So in the last webinar, the idea was that this market was heading or was going to head higher, right? And there were two instances or two ways it could have done that. I was hoping that, or not hoping, I was thinking that this was a wave E down. And generally, wave E is known to be sharp and fast. So we were not really very much expecting it to be doing something like this, which it has done, right? Waves can be very fast, like a very small candle. It's 1H, right? If I go to the daily, it may be just 1 or 2 days, and this whole move may have been 1 week or whatever. So that's how wave E's are. So yes, our primary assumption was that this was the end of wave E, and this market can head higher. And the secondary assumption was that this market will go and do something like this, which it has exactly done, and then it will head higher. So basis on the primary assumption, I was long, right? Somewhere here, I think I exited in loss. No, actually not somewhere here. Somewhere when it started to go down, I exited in loss. I am not sure what the exact location was, but the main idea was that I did not want to hold on to the long position if the market was doing this, because it could have gone to even lower levels, and I can always just hop back into the trade once it takes out the 1.09721 level. So the count at this point in time is that I'm expecting this is possibly wave E. Right, let me remove some of the clutter here. So yes, I added some longs here as I remember that. Now, if this is the wave E, then of course it should all be well and good. If it goes above 1.09721, I will hop back into the longs again, right? 1 second. Yes. So I'll hop back into the longs again if it goes above that level. There's a second thing I have to discuss here, which is that this wave E, if it is already going and consuming time, then there is also the possibility that it might just be the wave A of the E. This might just be the flat for the B of the E, and this might just go down for the C of the E. So in that case, it can consume a little bit more time and go lower first before heading higher. So long story short, it is best to wait for the upside levels to be taken out if you do not want to see something like this happening, or hold on to the market while it goes lower, right? Nothing much to add here. I personally will be looking to add longs above the mentioned level, and I might add some longs here, but it will only be partial position. It will not be the complete position per se. I don't think there's anything to add, but if you guys have any questions, you can just post them in the comment section before we head over to our next chart, crude oil. So you can just type in the comments. I'll just head over to the next chart. And also, please do not forget to type in understood, clear, or something of that sort, so that we know everybody is following whatever we are discussing. Now, this one is not really moving. 1 second. So crude oil, it is not really moving as we were expecting it to. Basically, it's having no clarity. Thank you, Madhuji, by the way. It is having no clarity whatsoever so far. The main idea remains the same. Previously, we were thinking that this was the wave A and this was the B complete here. Then it made another low, and then it is going on and challenging that low again. So I'm not really sure what it is doing. Is it forming a base? Then better to wait for it to break out the high 72.90, right? Basically, I'm not really interested in this market at all. And if it's going to break the low, then I think we can look to analyze this market again around 65.543. As far as the counts are concerned, it is having a wave Y completed over at the price level of 64.08 over here. So keeping that as our point of reference, there is the possibility that this is the A up, B down, C up, D down, and E up. Let me remove everything. So if that is the case, then this will be the wave X as a triangle. If this is a wave X as a triangle, then it can head much, much, much lower. Right? That's the hypothesis to the downside triangle followed by downward movement. And the second possibility, as per Elliott Wave counts are concerned, is that the X is possibly already complete. Now, see, this leg has already gone lower than the wave Y. So technically we can say that wave Z is already over as well. So in which case this would be the wave 1 up, and this all will be the wave 2 of some sort, right? We can count it, but as I said, there is not much point in it. Somewhere there's a wave 2 and then it will go up. That is basically the gist of it. So as I said, I don't have any clue which way it is forming. So I have left it, and also I'm getting trades left and right on the other instruments. So not much concern with it. But anyways, guys, if you have any specific question regarding this, do let me know before we move over to gold. Good morning, Philippe. Thank you for the confirmation there, Philippe and Ray. Now let's head over and see what is happening in gold. So gold. Now we discussed two counts here, right? Let me just load all of them, both of them. 1 second here, there it is. Now see, we'll start off with our second count here instead of using our first count. Not second count. Basically, these both hold almost the equal weight. Now let's just focus on the part 2078, our point of reference. What happened here? From this point of reference, what I am looking at this market as is a WXYZ or a triple zigzag correction. Those of you not much familiar with Elliott Wave concepts, three waves down will be a W. A connecting wave is called an X. Again, you will see three waves down, again a connector or connecting wave, and again three waves down. So in this particular case, looks like wave Z is already complete, A down, B up, and C down. Right. Of course, if it's going to become complex, we will know when it breaks the low or goes near the 1899 or 1900 level, let's say. But as far as things are concerned, this line is what I'm going to be watching out. This trend line, if it's broken to the upside, then it's a good sign or a first sign of strength, I should say. Not really first sign, but an important sign of strength. First sign of strength is sort of already there. So an important sign of strength will be if the market goes above this trend line and then sustains above it. Let's say pulls back to it in three waves and takes a support over it. That will give us possible long trading setups, right? If it plays out, generally these setups do not come out as clean as I'm just talking about them. But we'll see about them in the Slack group if you are part of it. If you are not, you can just send me the inquiries using the contact us page. I'll talk about it later once we discuss the second analysis. So yes, this is the first hypothesis I'm thinking this market might be playing out. WXYZ complete and possibly upside is what we will look out for. Second analysis on gold is, well, it is sort of suggesting that much more downside should be seen. So if you follow the counts, you can see that we have an impulse here. Basically, what I'm having here is something like this. So first, second, third, fourth, fifth will be the first leg down. It should be followed by an A up, B down, and C up. It should then be followed by 1, 2, 3, 4, 5 again. Now, in this case, from this point of reference, again the same level 2078, we seem to have completed the five waves here, right? And that basically means A up, B down, C up should be seen on this counter. So even in the second analysis, it is suggesting that some upside can be seen on this counter, right? And now let's look at the internal counts of this structure. So here is the important level we will look out for. Again, I think it is the same trend line. Let me just verify that as well. It is the same trend line, so not much point in drawing it again. What I was trying to do was here was checking the 2-4 trend line, which is actually coming out to be the same as our triple zigzag corrections trend line. So a nice coincidence there. Basically, long story short, what we are looking for is for this market to go at least a little bit up or sideways. And in doing so, we expect it to break this trend line at once. Right? And once this trend line is broken, yes, it can then either take support and go a little bit more up, or it can just break it, and then fall back again. So in both cases, what I'm basically saying is either going up, it will break the trend line, or even if it's going sideways, it will go sideways enough break this trend line at once, right? So this trend line remains our pivotal point in this analysis. And yes, we can enter some minor shorts here to look to build upon it if the market gives us more clear signs. But that is something we will cover later on, right? In our continuous coverage in Slack. So now that this analysis is done, I'll just like to quickly point out to our group, which has been running since 21st of June. Now, what we have been able to achieve is many trades. If I remember correctly, on S&P itself, we had 3 trades within this week. Maybe there were more small opportunities, but 3 main opportunities, out of which one was a stop loss hit and 2 were in profits. For gold, we were able to capture 2 trades. One was a win, another one was a stop loss hit. BTC, we have been able to capture a trade, which we'll discuss as we go to BTC. But overall, in the number of trades we have posted so far, we have been on the plus side, right? So if you want to catch these analyses and see them live, basically, right, you can be a part of the group. For that, you will have to send me inquiries using the contact us page on the website itself, which is 50eyes.com/contact us. Now that's about it for that. Let's now head over to our next analysis of S&P. And in the meantime, guys, if you have questions regarding this count or this analysis, I should say, then make sure to post them in the comment section. If not, do make sure to type in understood or clear. I will have to contact the hosting provider. So it looks like the website is temporarily down, which is a huge amount of downtime for the website. So I'll look into it after this webinar. Anyways, continuing with our analysis, where were we? Yes, yes. Thank you, Ray, for the confirmation there. And now let's head over to, thank you, Madhavji. So now let's head over to our next chart, which will be the chart of S&P's 500. It seems to have worked really well. And I currently have a free trade running, which is running in decent profits, actually. So now, first of all, let's just quickly see what we were discussing in the last webinar and build on top of that. In the last webinar on S&P, we were, let me check the date. The date was last Friday was 23rd. So somewhere here we were discussing the chart of S&P. Where is 23rd? Yes, there it is, 23rd, somewhere here. Somewhere here we were discussing the chart of S&P 500 in live market, and the analysis was that there was levels for wave 4. Yeah, there it is, the level for wave 4, 43.45, as you can see already marked. This was the level for wave 4, and the view was that this market will or should or could reverse from this level, and if not, then it can head to 43.20. What happened was that it did go to 43.45, tried to take some support over it, that level, and then broke a little bit. Basically, long story short, it did take support around that level, right? And not only that, we were able to capture this up move in, I think, 3 instances, 2 instances within this week, and 2 instances last week, 4 instances. I was able to capture, actually. Actually, I remember 3 very clearly, so I'll not comment more than that. So we were able to capture this part. I'm actually in longs right now. My entry is around 44.04, I think, roughly speaking, and I have moved the stop loss to a little above the entry, like 44.10, I think. So it is in a free trade sort of, and our target minimum will be the last high, which is actually already achieved, 44.51, right? So the way I traded is I had a huge long position over here, and took some longs somewhere in the middle of this part as well. But after taking the longs and booking profits in the last long position, I left some lots open, and those lots are currently in a free trade. And those not understanding what it is, basically free trade means a trade for which the stop loss is above the entry, so you can just let it run. And what the worst that can happen is that it will hit your stop loss and you will still be in profit. So that's the situation we are currently in. And as far as the analysis is concerned, let's now look at that. Again, by the way, guys, all of this was posted live in our Slack group. All the entries and exit I was posting in my Slack group. I'll just quickly show you guys, just for the sake of giving you as a piece of what we are doing here. So these are all the posts just within today itself. Close remaining longs, blah blah blah, push minor longs. This is the free trade entry, and it is moving as expected, right? So this is the way we work. The analysis along with the commentary along with the charts are all posted in the Slack. Again, as I said, if you are interested, you can just contact me, 50has.com/, contact us. Now heading back to our analysis, right now it does seem like wave 4 may have completed itself, or actually it does feel like this is a little bit too big for a wave 4, but then again that's how wave 4s are, right? So now what I think is that we have either completed the 4, which is the main hypothesis I am going with, H1, and which is suggesting upward movement. Why? Because if the wave 4 is complete, then wave 5 should be seen, and wave 5 is obviously going to go take out the high of wave 3, right? That's our hypothesis. One second hypothesis I'll just quickly look over is that this wave 4 is going to continue sideways, possibly flat or some other structure, in which case it can go a little bit higher than the wave 3 high, like let's say till 4470, and then it will head back inside the range again, possibly as a 5 wave structure before taking off for the new highs, right? So looking at both analyses, it is quite clear that swing perspective, we are looking for longs only, right? That's why I have also left a small position on this counter. Now secondly, let's see at the current count in a little bit of detail here. So what you can see over here is an impulsive count on screen, and the start of the count is here, point of reference at 4332, and from here on we have the wave 1 up complete, wave 2 down complete, and 3 up, 4 down, and 5 up for the first leg. So basically first leg correction, third, fourth, and fifth. So our first is complete over here, second is also complete over here, and we are currently progressing inside the wave 3. And if you are familiar with the fractal natures in Elliott Wave, then we already know that the wave 3 will have 5 waves inside of it. So currently it does look like it has completed the first wave and the second wave only, and currently it is heading higher for the wave third of the third, or it should be clearer now when I push it like this. So basically this is our expected progression on this counter. I should also move my trailing stop loss a little bit higher than the current level. Right. So basically, we are expecting a little bit more upside. Let me just conclude it by saying that we are expecting actually one leg up like this, another up like this. So we are expecting 3 waves up, right? So even if I'm wrong, we should at least see one wave up, right? Even if the count is somehow flawed or something, it should still give us one small leg up. It will be the case of the flat correction, right? Let me see if there's anything else to add. Of course, guys, if you have any questions, you can just post it right now in the comment section while I'll check a few more things. So don't have to really draw any fibs here. The immediate resistance is very clear, 45.12. Starts around 44.90 to 45.12. This is our resistance zone incoming. Right, so that should act as our immediate target levels or resistance levels. With that, I think S&P, we have covered all the points here. Let me see. Clear. Tips to watch fractals clearly. Not sure about tips. Basically, these things come with practice. Just practice multiple hours every day, and you should be able to see them. Secondly, you can just switch to a lower time frame from time to time. But if you are not trained enough to see the patterns, I don't think it will help extremely well. It might help a little bit though. So yeah, that's about it for S&P. Let's now head over to our next chart, which is Nifty, will be followed by the last chart of Bitcoin. Again, this one is working precisely as we discussed in the last webinar, right? Let me show you what we were seeing back then and how it is working right now. So 23rd June, yes. So 23rd June, the view was that this market has gone below this white. Let's actually push that on a higher time frame. So what we seem to be having is ending diagonal, which I did spot beforehand, right? And the trade setup was that if it goes below the white trend line, then we'll be looking for selling this market. Immediate levels were 18,602, followed by a lower level. So in truth, what happened is it did go below the white trend line. It did trigger shorts, but it never followed through to our targets. And instead, it gave a strong upward movement like this. And at this point, I made the post in our Slack group that we are expecting upward movement from here on in this market. Yes, analysis that we do in these webinars can get outdated very fast. Nothing can be done about it. And I can only post as per my convenience. So, and my convenience lies with the people who are with me in the Slack group. So that's where I posted it, and we were able to actually capture this part of the move, right? So that's about it for history. Now let's see what is currently happening. Currently, I think, yes, it is clear we have the wave 5 in play. So currently, I think we may see some correction in this counter and should be followed by one leg at least in the upward direction. Why? Because after this wave 4 Roman, we seem to be having an impulse in the upward direction. And this impulse seems to be in the double bracket 1, double bracket 2, and this double bracket 3 degree, right? In case I am wrong, it is possible that this is the double bracket 3 itself, double bracket 4, and double bracket 5. But then again, the correction which follows should be able to clarify that. This is what I'm really saying is that we generally expect a wave 4 correction to end near the 38.2 level. Anything bigger than that would itself suggest that something else is happening on this counter, right? So basically, long story short is I will be looking to plan longs on this counter unless something out of the ordinary happens. That is out of the ordinary in this case would mean something like 18,990 level broken to the downside. So as long as this level is intact, we will say that the upward trend is intact. If it goes below it, then yes, we'll take the losses and look to trade this market accordingly. That's about it for Nifty. Nothing more to add here. If you guys have any specific questions, just post them in the comment section. And let's now head over to last chart, BTC. Now here is the BTC chart. Let me see one thing very quickly. Yeah, we were able to capture long trades on this counter, this leg basically. Let's see what we discussed in the last webinar. Yeah, last webinar actually we discussed this trade itself. the long trade itself, nothing new. So what we have right now is I was long here. The idea was that either we had the 4 complete here, which should be followed by upward movement, or it will complete near the target of what is this 29455. So 4 can take support near 29455 and then continue from here. What am I really talking about? Let me just show you. This is what we are expecting, right? So I was long, but I did exit in loss because I'm not liking this strong downward movement. I mean, a downward movement is fine, but it has gone down quite impulsively. So I exited the positions at once. The idea is basically the same. If it goes higher than 31,030, let's just say 31,000, then I'll be looking to re-enter longs. And the idea that it can go down comes from the fact that this 3 can be placed here, 4 can be placed here, and 5th can be placed here. If that is the case, then the upward movement is already complete here, and then we can be looking at a deeper pullback, in which case there is not much point in continuing to hold a long position. I can always re-enter at the pullback or at the break of the last known high, which is around 31,000 currently, right? So long story short, BTC still the upside bias is there, but we do not have a clear confirmation of the current count. So if this is a wave 4, then as I said, it should take support around 29,450, 50, 60 levels, something like this, which it is currently already playing at. So if it does hold as a support, it should break the 31,000 level, which is where I will look to enter longs. Secondly, if it does not do that, it does not follow through with this hypothesis, then we know that it can head much lower to 50-60 retracement level, which will be coming around between 28,100 to 27,330. So long story short, just put an alert on the upside like I have and forget about it. That's the that's at least the strategy for me. Rest, I think there is not much to add here. It is quite clear and simple analysis, right? And of course, I will keep continuously following this and posting all the what do you call daily or up-to-date analysis and my own trades in my Slack group. Again, as I said, these trades which I'm pointing out here, as well as multiple other trades, were captured in our Slack group. And if you are interested in becoming a part, of course, I've said it, I think 2 times already. You can send your inquiries to 50guys.com/contact us. Lastly, if you are finding these webinars useful, then do not forget to hit the like button and, of course, share it with your friends and colleagues so that more people can be reached and giving us more and more motivation to continue doing these webinars. Right, with that being said, I think that's about it for this session, and I'll see you guys in the next one.